Hello everybody, welcome back. I'm Giuseppe Basile, also known as the FibStalker. This is the weekend video review part 2 for today, February the 12th, 2018. This is the start of week 7 of this year, 2018, and this video is part of the FibStalker analysis and trading service. Welcome, and before we proceed, make sure that you have read, understood, and accepted the usual disclaimer here. If you have not done that yet, please pause this video now and read and accept the disclaimer. Trading forex and futures and stocks carries a high level of risk and might not be suitable for all investors. Okay, thank you for doing that. And let's continue here with the analysis of our market. And I'm going to start from the Australian dollar, Canadian dollar. This market has traded shorts, weekly shorts, 99.63, and this has pushed price lower for 2 weeks here. And now what we had is a test of the 50% long. Okay, so 97.93 as traded. Now it's always important to understand the sequence, how these levels trade. And as you can see here, what we got here is a market moving lower. The long was not tested, the shorts have traded, and then long came into play and actually pushed this price higher. So this suggests us that longs are in control, at least at the moment. Now if this market moves lower and pierces, then we're going to see a continuation lower. If the second test, which is a dangerous test, holds here, then this market might reverse here. But we have to understand where the chances are here. We also need to look at the larger time frame. And as you can see here, this market has tested the low of the range here, 96.59. Found participation short at 99.64, and it is now trading the 50% level, but this is a range, so it's possible for this market to just continue lower into 96.59. That's the information we have. We don't know whether this 50% is gonna hold here. Short setups are in play, long reactions are in play. But it seems to me that this market has a bearish bias here. Canadian dollar, Japanese yen, the weekly clearly shows a 50% short here, and that was tested twice on the weekly time frame. Remember how the 50% long was never capable of bringing price into that first target. Okay, so that's the longs here didn't have that strength. Whenever the shorts came in, they pushed price lower, and so now the retest of 81.81 it's in the card. It's just a matter of how the market is going to get there and where the setups are. Okay, now you remember that we had this extension short, the 89.30, that has traded first target the 87.88, and the second target that went even below that level. So we know very clearly what's the next measure move is, and that measure move has traded already. It's lows to low. So if this level is retested and holds 86.68 holds this week, that's the new short for the Canadian Japanese yen, which is going to likely push price into first and second target. Remember that the larger time frames show a potential for a continuation lower. There's nothing stopping this market. The weekly, if we get a deep retrace, the weekly shows that this market could retest the 87.48, but that would only be a better opportunity for a short. Okay, so the larger time frame are clearly showing participation shorts, double top, room to move into 81.81. If 87.48 trades, that's going to be a great opportunity for a short. Okay, very, very important. Euro Australian dollar, this market has traded an extension long at the very beginning of the year, and it had 2 weeks ago a very strong week higher. And you remember that we identified 50% long that we considered traded. Any retest of this level, successful retest, would be an opportunity to go long this market. Okay, and the first targets are above. When we look at this price, this large measure move here is still in play, and this has two targets. And let's highlight these targets to let you understand where we are at the moment in this market and where this market could go. The first target was the 156.07, and that has been hit. The market never came back to trade the next measure move long, which means that this market is still within this extension, and actually has now the possibility to move price and price now has the possibility to continue into 162.19. In the meantime, the inner extension as a first target that helps price at 160 basically it helps price into that 162.18. Okay, so the larger time frame are suggesting a continuation higher, and on the daily we have this setup. If this market retests this level, then it's even a better opportunity to get long this market. Europound is a complete mess with a downwards bias below resistance. That's the way I defined it last week. And I want to be as far as possible. It's one of the worst market to trade at the moment, at least for me, and based on the metal. And I suggest you don't put your hard-earned money at risk on this market. Okay, this market is eventually going to offer great opportunities, fantastic opportunities, because whenever this nonsense here ends, we are gonna see strong moves lower. We don't know when that is going to happen, but it doesn't matter for us. Even if this market moves a lot, eventually we are gonna capture the reaction on any extensions. But at the moment, I just want to stay away from it, and I'm even going to comment on it. It's a very good instrument to lose money actually at the moment. Okay, Euro Canadian dollar has this 50% long that has traded in July last week. I remember I was in Quebec City watching this market, between of course a good dinners, lunch, and of course enjoying the city. But in the evening I would look at the market a little bit, and I even traded that long, I remember. But the first target was never reached. Okay, so we are still into that measure move, and now we need to understand whether this market is going to give up on the daily and trade the extension long that has not traded yet, and that's the weakness we are seeing here. Okay, the extension has also failed. The sequence of extensions has failed here, as you can see. So at the moment this market is kind of it's kind of in a moving it's moving laterally here on top, potentially on top of this 50% long that so far has been respected. So let's see if this is being respected. Is this going to be respected again this week? And if it does, then it becomes the long that brings price to that first target. Euro Japanese yen, we've seen Japanese yen very strong in this market, and one important aspect is that we always have to remember that this market has pierced the 50%. Okay, now bulls and bears here are failing, so this market is really on a very large time frame. It's moving laterally, so a correction is possible. A correction on the monthly would mean very good opportunities on the weekly and daily as well. Okay, so when we look at the recent sequence here, we are able to make some deduction. I call it price discovery, where the market could actually go. So we have lows. Sorry, this was a 50%. A 50% retrace. The very first retrace was a 50% retrace. It brought price into that first target. The second target was never hit. Okay, so this market is still within a sequence of measure move, traditional measure move, and the next area will be the 133 90 134 level here. Okay, so if this market gets there and reacts lower, that is going to be the point where we're going to see the continuation lower. If the correction higher is deeper, then this market could also trade all the way into the 134.32. Now, the way we time these levels, we never buy or sell this level blindly. We use a technique called the FibStalker timing that we can actually use to study the counter trend sequence higher, and if and then that fails, after one of these two levels is tested, that's our indication for participation of the algorithms, and then in this case would be a continuation low, and that's when we enter. Okay, there are other ways to enter, and there is a workshop that I only offer to paying subscribers where we look at the I basically give a simple trading system with several entry and stop and risk-free management strategies that can be used to enter these levels even without the FibStalker timing. So that's something you want to stick around to get to, and that could actually help you. And it's a very good trading system, by the way, and that can help you trade these levels as well. The best, of course, as I recommend, is to change and make that mental shift and change the way you look at the markets, and don't look at the markets through the statistical invalidity of indicators, but rather try to understand what moves the market, what is the structure of price. Okay, and that's what we do here at FibStalker Trading. Euro New Zealand dollar here is trading short now on the weekly since a few days here. As you can see, this area has been tested once, twice, and 3 times here. It's a pretty solid area, and it has a target below. That target is the 162.89 level. Okay, that's still in play. Of course, there is a 50% opposing measure move here, and we could make the case that that 50% has not yet traded, and this could temporarily stop price here. But as you can see, the participation at the weekly short is 1, 2, 3, 4 times. It's pretty stable, which means that this level is indeed a reduced short level. It gives us a target below. Pound versus Australian dollar has tested the previous highs here and seems to be reversing at this stage. We were looking at a sequence of measured move that was originated by this level here, the area where there was participation and extension long at the beginning of the 171.35, and then after that, actually, we had first measure move to target 178.70, and then second measure move here to target. Oops, just removed it, but I'm going to trace that again, and that's going to be from lows to highs into that first target, and the next measure move failed. So we look at the 50% long here, and that's where this market is moving to. Okay, and we're gonna see whether this market is gonna find participation there. However, this is a range now, and it's an M for Marder as well. So we don't know whether this level is going to hold. Okay, so we'll need to test that and see. And of course, we need to see the pound moving higher. The pound has been battered, and you're going to see this on all these markets. The pound versus New Zealand dollar is retesting for the second time that area. It's now holding, so this could actually give an hint of what could happen next year with the pound moving higher. Which would mean the pound regaining on the New Zealand dollar. So we will see whether that is going to happen. Okay, so here what we see on the weekly and monthly. On the weekly, it's an extension long, very similar to the pound versus Australian dollar. And in a way, this market is anticipating what we could see on the pound versus Australian dollar in the coming days. Okay, a test of the 50% level, and so far holding. We'll see whether that is going to continue. Pound versus Canadian dollar, same story here. We have an extension that is coming into play that has been tested already once. So we'll need to see if the second time holds. Then this is going to be a long, at least two previous highs and potentially even higher highs. And there are many lines here, so let's remove those that are not useful. As you can see here, the extension long lines up with previous highs, and the first target lines up of that extension long. Talking about this level here, the 168.31, lines up also with the first target of this potential extension that did not come into play as well. So if it does, it's going to bring price into that first target, and then we are going to see some profit taking. Pound versus Japanese yen is also very weak here, and if you remember, oops, let me remove all this. I don't know what I had there. So last week we looked at this 50% that brought price into that first target, and the next measure move, it's highs to lows. Okay, that has not come into play, and we're going to look at that level, and then we're going to analyze the 4 hour during the week to see whether this area comes into play, and this would be a continuation lower here. Remember, the 50% never came into play here, and that could also mean that extensions are in play. We don't know that, okay, but that's something that we need to look at now. Lower lows were printed, and there is a lot of room for this market to move lower if that happens, at least into this extension long on the weekly. So capturing this next continuation short is very, very important, okay, in this market. A deeper retrace would actually bring price again, because this market is very, very extended. A deeper retrace would actually bring price into lows to lows. Okay, so these again are levels, all levels that we have to watch: 151.46, 152.16. New Zealand dollar, Canadian dollar. This market is actually trading laterally here, and it is not impossible for this market to trade into the 82.97, 83 level. Okay, and the this is a range, so it's very possible for this market to retest that level. In order to do that, we need a setup short. Okay, and when we look at the monthly here, one potential level that we were looking at was the 50%, the extension short here, which did not come, which saw no participation. So what could see participation this week, and this level has not been tested yet, 92.01, the high was 91.88, so it's still a lot of way there. So I'm going to remove this level, This is, sorry, I'm going to keep both these levels, okay, because one is the 50% we just saw on the monthly, and the other one is an extension short, which is actually, the reason why I want to keep it is because it's actually showing participation. So the long year on the daily so far have held first test, second test, if that which is a positive actually. Could even suggest that this market needs to continue higher and test than 92. Okay, but if that level fails, then I don't think that the 50% long here is going to hold, because that would be against larger participation from larger time frames. Okay, so do not anticipate that. I would not anticipate that. Let's continue here and let's look at the Australian dollar, Swiss franc. The Swiss franc has been pretty strong, and this lateral move now has the potential to bring this price on 71.80. Okay, and I'm gonna remove the 50% that never held, and if this market makes another attempt at testing this 50%, sorry, this was never tested, of course. So this market, when it comes to 74.47, that would become a great opportunity for shorting this market. That's the kind of setup we want. Notice how the first target lines up with the 50% long where this market is going. Of course, there is always the possibility for this market to just continue lower here, in which case measure moves in the smaller time frames, weekly and daily, needs to come in play. And that's what has been happening last week. We saw lows to lows participation, first and second target, and then very technical market, lows to new lows participation, and it actually hit that first target, and now it's coming back. So if this market does not retrace deeply, it's going to retrace only into the 73.85, which is the next level that we have to watch for a continuation lower. Okay, Australian dollar, Japanese yen, same story here, big strength on the downside. This time for this market, coming also from a valid 50% level was already tested before. The long were tested, the shorts were tested again twice. So this market is going to 81.34. No, very little doubt about it. Okay, just a matter of how it gets there. And a great opportunity to get short into that level would be lows to lows, 85.86. Okay, if the market gets there, this is gonna be a good opportunity to short this market. Okay, let me see if I can annotate. What I was trying to say is that okay, let me see if I can annotate or not. Doesn't seem to okay, so what I was saying is that if this market comes back to 85.86, there's going to be a good opportunity to trade short into 81.34. Okay, and also for this market, of course, there is a 50% short way below that, 85.54, not way below, but certainly below that on the daily time frame, and that would be the same opportunity. Australian dollar, New Zealand dollar has been very technical on the way up and then on the reversal down, which took a little bit. Which took a lot of time, but it's actually happening. And we also mentioned that we are not anticipating this 50% holding. In fact, it is not. And the first target here has been approached, 108.92. Sorry, the low was 107.43, 107.36. So it's 7 pips above, and we can consider that hit. Of course, this market could continue lower. As I mentioned, this level, this area is really not there. This market is in a range, and you know, it could just continue lower. The daily, excuse me, the daily has traded the extension short here, lows to lows, 107.74, and this is putting pressure lower in this market into 106.83 and 105.83. All right, Canadian dollar, Swiss franc. This market has tested the full 50% here on Friday, and it's opening here with strength. Now we'll need to see whether this is a reversal or this market is going to trade into the next extension short and retest eventually again this level. And at that point we need to understand whether the market is going to respect that level, in which case it's going to be a reversal, or is going to continue lower. So trading 75.62 might be very important, because if this market continues lower, that'll be the only opportunity to, if this level is respected, to take a short into lower price. Euro, Swiss franc has corrected in the last the last week here. We saw you know, two strong daily moves lower here, weekly move lower here. Sorry, this is the weekly, so obviously talking about the monthly here. And the extension, this aggressive extension here is in under pressure here. Okay, where this is coming from? Well, we have the we had this extension long that found participation initially in 2016, mid of 2016 here, and then again has traded, and price was supported in between August and April of 2016 and 2017 here, and then hit first target and right into second target, and that move lower started. Now if the extension here fails, and we are very close there, so far it's been respected, but if he moves, price moves below 114.38, then you're gonna see a much bigger correction here, with the Swiss franc gaining on the euro, continued here gain on the euro. Okay, and that move could be to 1.819, 111.92, 112 first, and then potentially into 107.93. Okay, so these are the two levels to watch on the larger time frames. Pound versus Swiss franc here. We had this 50% that was not initially respected, very dirty trace, respected, not respected, respected, and brought price into that first target, but was not capable of bringing price into that second target. Okay, so the best trace we have now is the lows to highs, and that market has not reached that level yet. So this market, if it reacts higher, it's going to be a short opportunity into that level. If it reacts into the 130.67 this week, or if you could just drift lower into that level and see whether it's going to be a continuation higher. New Zealand dollar, Swiss franc has also traded lower here. What we are seeing in this market is really drifting, a market drifting laterally, trying to, but not capable of respecting shorts here. The market anyway moved lower, and it has a busted setup into first target into 65 level. Okay, so that's what we see here. And lows to lows. If the market comes back into 68.50 and holds, that could be a reason for a continuation on lower. This market is not as stacking as other market. We had to identify after the fact this anchor here. but that gives us an idea where this market can go. And if this level is retested again, we know the targets that are below, and we can see these targets on the daily time frame here. The first one would be 067.01, the second one 066.13. Okay, so these are the two levels to watch. And the last market for today is going to be the New Zealand dollar, Japanese yen. This market has 50% longs here that on the monthly are still in play. They held once, twice, and now could be retested. The shorts were not able to do their job properly. In fact, this level failed here. And the so at the moment this market is there are two possibilities. So you can see also bulls also failed here. So this market could move laterally and drift lower here into previous 76.36, but we don't have clear setups on the larger time frame, and also on the smaller time frames this market is not being technical. The only level that we can mention is 79.33. All right. Okay, so this is it for this weekly review. We touched on all the markets, futures, majors, minors, and others, and we reviewed the larger time frames, monthly, weekly, and daily, and then as usual during the week we focus on the lower time frames and we identify setups within the framework and the price structure that we identified on the larger time frame. Thank you for watching, and I'll see you in the room. Bye bye now.